I didn't know that. Well, and just, I brought this up, but just so everybody's on the same page, maybe not everybody knows what a 1031 exchange is. Can you explain that just briefly for us?
Yeah. Section 1031 of the Internal Revenue Code required you as a seller not to recognize gain or loss if instead of selling your asset, you exchanged it. So in other words, if you took your car and you gave it to the dealer as a down payment on a new car, whether or not you had a gain or a loss, you were not allowed to recognize that. All that you would do is increase the cost of the new or reduce the cost of the new based on the value that you were given. And where 1031 exchanges have really been used are in real estate. The great wealth in the United States overwhelmingly has come from real estate. And what savvier real estate people would do is they would take a property that was worth a lot of money that they had a big gain in, and they would exchange it for a larger piece of property elsewhere. So they would keep pyramiding up, never paying tax on the gains because they had never cashed out their chips. And then at the very end, what would happen? They would die. And we usually talk about death and taxes are two things that you can't escape. But actually, if they kept doing that, their death ensured that they escaped the tax bill. The best example of that is actually not in real estate. It's George Steinbrenner. When he died, the Yankees were worth well in excess of $1 billion. There was no tax paid for them. And I forget what he paid for the ball club. I don't know, $20 million, $30 million. So that totally escaped tax because upon death, you receive an increase, what's called a step up in basis to the fair market value. So those people who held their real estate and kept pyramiding and exchanging it for other, but never cashing it out, built a huge amount of wealth and really weren't paying tax on that. They were paying tax on the rental incomes that they received and any side income, but never on the gain on the property itself. By the way, 1031 exchanges do not pertain to publicly traded stock. So you can't do that by taking stock with huge gains, taking your Amazon stock and trying to use it to buy Microsoft, for example, or another valuable stock. You'll want to pay the tax on the gain. So
also not applicable in crypto for those of you cryptophiles there.
Yes. And that's a whole nother thing.
The can of worms. Yeah.
A whole nother, which the IRS is still trying to figure out.
Yep.